Hi, good evening, traders. 6th of April 2022. This is a Wednesday evening, 35 minutes past 8 p.m. And the Nifty consolidates for two consecutive negative sessions. Today it was down 150 points, down 0.83%. And yes, it slips below the psychological 18K mark for the first time after it broke out. Let's take a look at the 75-minute time frame, one time frame lower than the daily. And what you will observe is this. That is, the opening itself was the main weakness for the day, post which it just stayed completely range bound. There were instances where the low of the day was breached. There was an instance where high of the day was also breached, but net result was nothing much. After the weakish opening, the index essentially stayed flattish with lack of bounce back and even lack of follow through sell off. Structural uptrend, there is no doubt about it. The index is holding itself pretty well to this underlying uptrend. And when we get these kind of big breakouts that we noticed recently, these breakout levels become supports going forward. So if any kind of further weakness we notice for the rest of this week, then 600, 17600 and then 17400 are the kind of levels that one can look for short-term supports. But not much damage overall. As of now, I'll reiterate what I said was we had a great run. 1, 2, 3, 4, 5, in 6 days the index bounced back pretty well and it provided a nice breakout also. And so yes, a couple of days of consolidation correction is as of now healthy. It's not threatening the underlying uptrend yet. The ones that rallied the most supporting the market, the bank nifty, the private banks, the financial stocks, and at the early stage, the IT stocks, those are the ones which are getting hammered the most. Surprisingly, the IT stocks like Infosys and the others gets hammered quite a bit in today's trade. I was expecting that they would pick up a bit of buying, but that didn't happen. You would notice one thing, that is the small and mid caps are outdoing the market. Both the CNX mid cap and the CNX small cap indices were positive in today's trade. And something that I was sharing in yesterday's video, that the index may not go significantly away from the current price either up or down, but the overall market is very likely to stay sector and or stock specific. And that was something that we noticed in today's trade also. From the very beginning, it was the day of the metals. Yesterday it was the power stocks. Today also the power stocks extended themselves further on the upside. And the odd stocks here and there which had a great run, 3%, 5% kind of gain. So I think this nature of the market, that few particular sectors and few stocks are going to outdo the overall market, is very likely to continue for the rest of this week as well. But finishing off with the bank nifty, it's very likely to tease this gap up with which it opened. And so the levels of around 35,500 should be looked as a short-term support. A look at the 75-minute time frame will give you a bit of more clarity on what was the exact price action in today's session. Taking a little bit of time for the charts to populate at my end with TradingView, maybe an internet issue or server issue with TradingView. There we go. This is a 75-minute time frame, and over here you notice the same thing. Post the opening, nothing much actually happened. And the previous highs, which was around this price, this should now act as the immediate support for the bank nifty, which is close to the psychological round number 37,000. So structurally, both of them are still in an uptrend. They're going through what we can call as healthy, much needed short-term correction, and as long as it stays short-term, it's fine. If it extends further down, then we will probably start to question the recent breakout. But strategically, please maintain a bullish bias and look for short-term momentum on the upside. IT was definitely disappointing in today's trade. The CNX IT is the biggest loser, followed by finance, private banks, service, media, healthcare. But it was the metals which definitely carried it forward from the very beginning, and we did see some pretty good movement coming in from the metals and mining stocks. Coal India, definitely one stock which opened really well and followed through for most of the day's trade. It's going through a structural breakout, and if it manages to stay above this, if it manages to stay above 195 for the rest of this week, then 200 or a little higher than 200 is not going to be any big deal at all. Pattern traders will definitely observe the cup and handle breakout that Coal India offered in today's trade. So overall, as I said, I think stocks are very likely, few odd stocks are very likely to outperform the market, and we will get that kind of a market condition, market nature, where the index may stay a little bit of 100, 200 points plus and minus. But yes, I think the alpha lies in recognizing and participating, especially probably within the mid and small caps, wherein the momentum seems to be pretty high. Let's see. We would prefer to see that the index not losing any further grounds from here on, max 17,750, and if it manages a bounce back, that will be great. As we record this session, a look at the global markets, and we see that the SGX is down 100 points. It's down 107 points, trading around 7,760. So we've been talking about that level, 7,750 max on the downside is fine. But the European markets are negative as they're trading down anywhere from 1 to 2%. Crude is flat. Gold is also positively flat. Nothing much there. If you take a look at the US markets, they are also fairly negative. So with that in mind, we will see how the markets behave at their opening tomorrow. Do we see a weakish opening and a follow-through bounce back or not? Let's see. But strategically, as I said, maintain a bullish bias. Take care of yourselves. Trade well and trade wise.